investment move. Now, here is Quentin Hardy of Forbes magazine, Kudlow & Company contributor Jerry Bowyer of Benchmark Financial Network, and National Review Online. We have the aforementioned Vince Farrell, CNBC contributor, managing director of Scotsman Capital, and Kim Cohey of Fort Pitt Capital Group, first time on the program. But first up, big story. We go to Ryan Knott, who's the CEO of National Home Auction. He's going to tell us about this booming foreclosure sale business and how it can rescue America. Mr. Knott, welcome to the program. We appreciate your time, sir. Everything I read from this morning's Wall Street Journal, the lead story in the paper, okay, prices are falling, home sales are starting to rise, yes, foreclosures are coming down the road, but you all in the foreclosure auction business may save America. First of all, I want to ask you, what kind of traffic are you seeing? First on the foreclosure side, how is the product coming in?
Thanks, Larry. The product is coming in at a rather alarming rate. Lenders are realizing significant losses with respect to the amount of properties that they're taking back. And our National Home Auction and other home auction companies, for that matter, are doing a very strong job at liquidating these assets for these asset sellers at close to market prices or better than market prices.
Liquidating means sell, is that right?
That's
Sales.
right. Selling these assets at auction, correct.
And how much, walk me through a little bit. I want to learn more about this, but first of all, let's talk pricing. Let's talk pricing. Now, the stories in the paper, there's Detroit, for example. I don't know whether you cover Detroit, but Detroit, prices are down 50%, but the demand for these homes that are on the auction block is way, way up. And since I believe in free markets, to me, this will clear away the unwanted inventory and turn a foreclosure into some family's new home dream of ownership. So how are the pricing here?
The pricing is excellent. The markets such as Detroit are seeing greater severity than other markets than California and Florida, although markets like California and Florida, for example, are seeing larger foreclosure rates and numbers than in markets that are more depressed and in a distressed mode, like Michigan.
You're running auctions out where? In Southern California, is that right?
Nationwide.
Oh, you're nationwide.
We're throughout the nation. We're in Arizona, Nevada, California, Florida, New York. We have a number of other states that are currently in licensing as well.
In your current schedule, I'm trying to move fast to get through this, and I want our panelists to jump in, because I think this is the nub of the whole process. The correction in housing, both prices and sales, is going to come through these auctions. That is my view. I have adopted you as my recovery agent for the American economy. I want to know, first of all, how many auctions are you presently engaged in, or in the next month or two, how many are out there?
We plan on a schedule of a little over 60 auctions this year throughout the United States.
And how many homes will you sell out of that? How many foreclosed homes will you sell, given that 60 auctions, which is a big number, 60 auctions? You're going to beat Sotheby's by quite a bit.
That's correct. Between 5,000 to 6,000 units.
Wow. Now, how many of others in your business are around the country, more or less?
Some are more, some are less.
I mean, other auction houses, how many of them? Who's in this industry? Are there 5 others, 10 others, 20 others?
Larry, there's really a handful of companies that are doing it to the scale that we are, where we go into a market such as Los Angeles and spend over $1.5 million in advertising to drive a few thousand people, almost 5,000 people, to 2 auction days.
All right, a couple quickies, and then I want the panel to come in. First of all, you have any trouble getting financing for these sales?
No, you know, it's a very surprising buyer that's in the marketplace today. A third of the buyers approximately are first-time home buyers. Roughly a third of the buyers are investors, and they're buying under today's credit guidelines and standards. So, you know, obtaining financing for these people, I would say that a good 90 to 95% are qualifying under today's credit standards.
Wow, 95% qualified. And you said, as I think I just heard you, first-time home buyers are about a third of the buyers. Is that what you just said?
Approximately a third are first-time home buyers.
All right, so that's pretty interesting, pretty outstanding stuff. And finally, how many new employees have you hired?
We've hired in the last 30 days over 50 employees.
Over 50. So what's your staffing level? What's your head count now?
Just over 60.
And how many people do you think are engaged in this around the country, auctions?
Auction companies?
Yeah, I mean, head count for these auction companies. What do we talk, 100, 200, 300 people?
Probably closer to about 400 people for the top 5 auction companies.
All right. Let me go to my pal Quentin Hardy out there in the left coast. Quentin, you heard Mr. Ryan Knott talk about this auction process. We got news today. The Case-Shiller Index down about 11% year on year.
Yep.
Prices probably keep falling, but my point is free markets, heck, let prices fall. When something is cheaper, then the demand for it goes up, Quentin, and you just heard Mr. Knott talk about the auction process, which is pretty spiffy. This could rescue America, could it not?
Well, absolutely, but if you like prices going down, you'll love the Dow at 11,000, won't you, Larry? You know, prices going down is not unalloyed good news. That is 6,000 homes being foreclosed on. That is 6,000 families being wiped out. Hey, that happens. The banks are making a market in their inventory. They're getting liquid. The failure to do that is what destroyed Bear Stearns. It's a positive in that direction. But let's have a little perspective here. 6,000 homes against the actual overhang, really not a big difference. Let's have a little more perspective. It's the end of March. The real supply comes on the market in the next couple of months. That's going to drive housing prices much, much lower than a few foreclosure sales.
Mr. Knott, I just want you to weigh in on one of Quentin's points here. 6,000 homes sold, is that the total around the country for all the auction houses?
Oh, no. There's probably going to be close to 50 to 60,000 properties auctioned this year.
And subprimes are 2 million houses?
And that may pick up. Well, actually, no. They're actually closer. Right now, they're close. The foreclosures are actually slightly under 1 million. There's a lot of forecasts with numbers out there, but we don't know anything about that.
Total number
I mean, the total foreclosures, that chart looked pretty ugly. It's actually 2% of total mortgages. That's really all it is. Okay. Vince Farrell, Quentin Hardy says the decline in home prices equates to the decline in share prices. Now, that is a correlation coefficient I am not aware of. I've never heard that before.
I just said lower prices are not unalloyed good news, Larry.
What lower?
And
I
these
think
lower prices will affect consumer behavior. They will affect the pricing of mortgage bonds. Lower prices will affect consumer behavior massively. They went up. Consumer spending went up so much on refinancing. It only stands to reason consumer behavior will pull in as housing prices fall.
Vince, let me go to you again. Yeah. I believe what Quentin Hardy is lumbering through is the laws of supply and demand. I think that's what he's trying to describe, but he's attempting to put a very pessimistic, bearish spin on it, and I would like you to respond. The author of the Farrell Bottom, I want you to respond to this Quentin left coast Hardy pessimism. It's called Adam Smith, Supply and Demand. Go ahead, Vince, please. Pick up.
Quentin, hey, how are you? Well, I would add one thing to it. It's the marginal buyer, marginal seller that dictates so much in the way of pricing here. And what I would say on this score is that what is unalloyed good news is that there is a price at which the market clears. And that's the most important thing about this, that there are buyers at some price and there are sellers willing to meet them. I saw in the paper today there was a Wells Fargo, which is a bank, by the way, I own personally, Wells Fargo official that said they have rejected bids of 20 to 30% of the appraised value for some of the homes that they have foreclosed, saying they're not there yet. What I'm glad to see with Mr. Knott's business is that there is a price at which buyer and seller meet, because you don't need to clear the 1 million homes out of inventory. Right. What you need to do is find the price at which they will be cleared. So one quick question for Mr. Knott. Off of where the foreclosure took place, the mortgage that was abandoned, what is the pricing for this on average? Is it 70% of what that mortgage was, or 80% or 50%? Do you see what my question is?
Absolutely, and I couldn't agree with you more. We are seeing pricing levels at between 75 to as high as 95% of current market value. I know I'm answering that question a little bit differently.
No, that's exactly right. See, Quentin, what I would agree with you there, if somebody that was at 90 or 95% value house versus mortgage and had to abandon it for whatever reason, that truly is a tragedy. But that is what it is. That's the way the market works.
The house, here's the key point. The house doesn't change. It's still there. The asset lives. It shifts from weak hands to strong hands. One's disappointment becomes the other's dream home. Jerry Bowyer,
and look, where I agree with you is, like, you know, Bear Stearns didn't go down because prices fell. Bear Stearns went down because they couldn't make a market. But people are making a market is good news.
Jerry, if I
can,
Jerry Bowyer, if I can just unhook for a second from Quentin's long shade of dark pessimism that he keeps trying to draw down on our conversation, I just want to note that this is exactly the kind of market-based action, in my view at least, that will solve the housing overhang problem and get us back to square one so the economy can recover, Jerry. Markets work. Mr. Knott is living proof.